Data Patterns is the other stock in focus, and they come out with numbers which were reasonably good. The stock has come off maybe because of a bit of a margin disappointment, but we spoke to Mr. Srinivasa Gopalan Rangarajan, Chairman and Managing Director of Data Patterns. Listen into a slice of the conversation that I had with him. How would you sum up your second half performance, sir? Because you've done exceptionally well on the revenue front, beaten guidance all through. The operational metrics maybe leave a bit to be desired.
We had projected 20% bottom line growth and 25% top line growth last year. I think we met our guidance. And also, if you had been following, we had taken a couple of large contracts or complete radars year before last. And this gives us capability building. So we've taken it at a very low margin, but that is necessary because the company has to build a lot of competence and capabilities going ahead to build complete systems. So knowingly that we had taken contracts, and that is what is reflected in the last quarter. The margin which you're talking about is lower than a normal margin. But we had compensated with the rest of the contracts to ensure that our guidance is protected.
Yeah, no, okay. And as I said at the start, you met the guidance for sure on the margins front. So I hear you say, sir, that you entered into a couple of these contracts which were necessary to build capabilities as well. Tell us a bit about that and tell us how does this augur for, let's say, the next 2 or 3 years as you build out some capabilities and as maybe order inflow improves as well?
See, what we have done is, India is going through a phase of looking inwards. The government is fully supporting Make in India. But, all along, we have been importing products from abroad and relying on foreign OEMs to supply defense equipment. So it is a large opportunity for Indian world-class systems to address the gap which is there in the market. What we have done is we've invested heavily in product development in the last 1.5 years. We went for a QIP and raised about 500 crores. We are spending the money to build radars, fire control radars, EW suites, communication equipment, seekers, a whole range of systems with local IP and building world-class products. Second, we are also building the required infrastructure. In the event that the contracts happen, we should be ready to deliver on the large opportunities. Third, we have now raised our engineering staff strength to nearly 1,100 people. We still continue to raise people, recruit people, and build competencies to see that we can go ahead in building Indian products as required to address the large opportunities. We're very bullish on the opportunities going ahead, and we're investing against those opportunities. This is what we're doing. So looking at the last year versus this year, we still retain the guidance of 20-25% top line and bottom line growth. The contract situation on the orders and position is a bit weak, as you said, but that has been delayed for no reason of ours. But this is all happening. We are now expecting a number of contracts to happen in the course of this year. One, on whatever we delivered products, which is getting repeated, and completed trials, we expect the contracts to happen. Two, also because of the existing skirmishes in the border, there is some amount of fast tracking of contracts is expected. So we are very bullish on the growth opportunities of Data Patterns.
Mr. Rangarajan, in the Q3 con call, you had spoken about how you are targeting 2,000 to 3,000 crores of new orders over the next 18 months. Maybe some spillovers from Q4 might happen in Q1 as well. So is there some color that you can give on what is the nature of the order inflows? Do you expect them to be front-ended in the current financial year or back-ended? Some numbers that we can work with?
See, there are some delivery delays. Though the products were ready, the offtake did not take place. Still, some of the contracts are not, we still have the products. The offtake is yet to take place, probably this quarter, next quarter. But besides that, the number of contracts which you worked on earlier and the production orders are happening this year. I don't know whether I can give the flavor of the contracts because we don't want to talk about contracts which is expected and in an open forum. But this is largely in radars, EW, seekers. These are the areas, and avionics. These are areas where we expect contracts to happen this year.
Got it. By the way, with the presumption out here, and I do not want you to comment on this, Mr. Rangarajan, but with the presumption that some of your products might have been used in the recent times, you and some of your peers have made the nation proud. So kudos on that, sir. One quick follow-up that I must have then to your first answer, wherein you said that you accepted some of those lower margin contracts to build out capabilities. Have those contracts been executed completely, and therefore can the margins move higher from what you've done as an average in FY25?
We've delivered on the contracts. There are various stages of acceptance and installation. But what we've done is we've built building blocks and capability. This capability can be either used to address opportunities in the same field, same products to be expanded, or it can also be used in building other systems which we are addressing. We are looking at in the coming years. So I can't say that this will happen. Whether the contracts will happen. We did plan that this will get repeated in large volumes tomorrow, but that is not in our control. But the capability building will be definitely with us, and that will will go a long way in building in addressing the large opportunity ahead of us.
Okay, so I'm presuming that when you're saying that top line and bottom line growth could both be about 20-25%, margins will be stable in FY26 relative to FY25. We'll not see a material decrease, but we'll not see a material increase either.
We don't expect material decrease. We'll be happy with material increase. Let me say that.
Okay, fair call. One question that most people have for companies like yours, which are doing a lot of this work, is around receivables. How is the receivable positions? I do believe there is some increase in the trade receivables this year. So how do cash flows pan out over the next 12 months to 18 months?
Okay. First thing is we're a debt-free company. We don't have any cash issues. We have nearly 400 crores in bank. Mm-hmm. So we are very well geared in the cash position to address large opportunities.
Sure.
Point number two, this year you see Q4 billing is more than 50% of the annual billing. So obviously that is appearing on the debtors list, which is slightly higher. Third, we're doing a lot of development, and the development contracts during installation acceptance and integration with the customer takes a bit of time. So the debtor days becomes extended. But this will all change in the next 2-3 years. This is what we've been saying. The more and more we start getting production orders and complete system orders, the data situation will improve and the working capital cycles will also improve. But today we are not really very worried about it. One, because we have cash on hand. Second is because the nature of the business is development oriented. Moment it changes into production, we should be good to go in terms of debtor days.
Okay, Mr. Rangarajan, the scenario has changed, wherein demand from India for Indian products, as you said, is up. I'm guessing that post all that's happened, I think the demand for Indian products globally might actually perk up relative to what it might have been. So I would love to know, sir, how do you see, how do I say, visibility? I'm sure you're confident for the course of the decade and maybe longer. I'm trying to understand the visibility that you might be sure of or positive upon or hopeful on. How long do you reckon that you can confidently say that next 3, 4, 5 years, next 2, 3 years, next 1 year, you are confident of visible growth, if you will?
We are confident of visible growth, both in India and abroad. The opportunities are very, very large in India. And what we're doing, 700 crores, 1,000 crores is a very, very small number compared to the opportunities lie ahead with us. Since we also develop products which has a total addressable market of more than 20-30,000 crores, I think a percentage of that should come to us because we're building world-class systems. So we believe that the opportunity is being large and that we are doing local IP augurs well for the company's growth, not just in 1 or 2 years, but I think going ahead, we should really do well, and we're very bullish on the opportunities and our capability to deliver against these opportunities. Also, last year, we did a lot more exports to Europe, South Korea, as well as UK. We did more than about 15% of our overall revenue came from our products, a full complete products, which was delivered to a NATO nation. So this also is a good thing. We've started also looking at outside India, where the products developed in India is also exported. Whatever product we're developing for Indian market is also export worthy. So I think the opportunities are large, and we are really gearing ourselves in building world-class systems here.
You reckon it could be a decadal opportunity or longer, sir?
Definitely. This is not a, we've always been long term. Our investment is in long term. We are always looking at long term and investing towards future. So the direction is very clear. The opportunities are long term. And what we are trying to manage is 20% bottom line growth is a short term. We believe that in the longer term, we should do much better with new products, coming out. And if it's accepted by the customers, then the opportunities are going to be very, very large.